is credited, and what is to be increased here? Bank. Profit eventually increases capital. Loss eventually decreases capital. So I believe all of you may have gone through the earlier discussion wherein we discussed at length about the rules of debit and credit. So we discussed few important points which I would like to reiterate here. If you haven't seen the lesson there, you can refer to this thumbnail with which it is uploaded. You can have a look at it. So we discussed about the meaning of account, wherein I have given you an understanding about how account appears, T format of accounts, classification of accounts, what is the classification of accounts, which is nominal account, real account, personal account, one which is a traditional classification. Then also we have seen the modern classification where asset, liabilities, expenses, gains or income. Rules of debit and credit. So debit, what comes in, credit, what goes out in various classification like personal, real and nominal account. It varies. Also we have seen the balancing of an account. So when we balance an account, the outcome that comes up, the balance brought down or balance carried down, we have seen there. Now, what is the meaning or implication of a particular account showing a particular balance, which is debit balance or credit balance, that we have already seen. So now let's work out a question which is based on these learning or the concepts that we have had in the last class. So today I'll touch upon this important aspect which will help you understand broadly the previous chapter from application perspective. Let's see this. So on your screen now we have analyze the following transaction, state the nature of accounts and state which account will it be debited and which account it will be credited. So this is the question that we have. Left hand side, the various transactions are given and we will try to work out these transactions, how its implications are going to be there on these lines, which are accounts involved. So which account this particular transaction, which all two accounts or even more than two accounts are involved. We will see that nature of account, whether the classification that we have seen, is it a personal or real, or when it comes to modern classification, is it expenses, income, capital, liability, assets, then how it affects, whether it increases because of this particular transaction, whether there is increase in the account or there is decrease in the account, that also we will assess there. And then comes the next one, debit, whether it is to be debited or it is to be credited. So by and large, working out this roughly 20 transactions which I have picked up, you will be able to understand the various transactions and its resultant implication on these five heads, so that you can better apply this learning in the subsequent chapters when you start working on journal. So let's pay attention to this. Started business with cash. So what are the two things which are coming up when a business that gets started with cash? So accounts involved are, one is the cash is brought in the business. So there is cash is one account that gets involved, and the second one is capital. So this is very clear. So cash and capital, these are the two accounts which are involved. Now cash happens to be what account? So it is an asset. So we'll write here asset, and capital is capital. As per modern classification, there is asset, liability, capital. So accordingly, we will classify how it affects. So whether there is increase, ask question is required to be asked because of this transaction, whether this particular asset in the form of cash is increasing or decreasing. So when the business receives cash in the form of capital, there is increase in asset. So we'll write here increase, and capital also increases. So we will write here increase. Now which is to be debited and which is to be credited? So since there is increase in asset is to be debited, because assets show debit balance. In order to increase the asset, we need to furthermore debit it. So therefore, this account is to be debited. We will write asset. So cash account is required to be debited. So I'll debit here cash. And what is to be credited? It is capital. I hope the basis of the transaction, considering the following above heads which are seen there, how we have classified is understood by you. Borrowed from Hari. Now Hari, somebody outsider who has given us some money. We have borrowed money from him, 1 lakh rupees. So how it is going to be entered? So here the amount is going to be the same, 5 lakh and 5 lakh. Now borrowed from Hari 1 lakh. So what is that? There is cash which is coming in because of the borrowing that we are doing. And second thing, there is a loan, Hari's loan. These are the two accounts which are involved because of this particular transaction. Now nature of account, cash is asset, so we'll write here asset. Hari's loan is liability, so we'll write liability. Now how affected? Whether there is an increase in asset or decrease, or increase in liability or decrease in liability. So because cash is coming into the business, there is increase in cash or asset, and liability, there is furthermore increase in liability. I hope this is understood. Now, so assets, which is cash coming in the business, so we will debit cash, and liability shows credit balance. We need to increase the liability. It needs to be credited. So this is Hari's loan. I hope this is clear. Now the third one, purchase furniture from Raj Furniture. So this is from Raj Furniture. So how we are going to enter this? So which are the two accounts which gets involved because of this particular transaction or impacted because of this particular transaction? So there is one which is furniture and asset, and second one is there is cash. So cash. So cash is these two accounts which are affected. So how is that we are going to enter this? So when there is furniture, nature of account, we have already discussed, this is asset, and cash is also an asset. So how we are going to write this? There is an increase in asset, so we will write increase, and cash is going out, so there is decrease because we are making the payment in cash, so decrease. So cash account, furniture account is to be debited, so we will write here furniture, because assets, in order to increase asset, we need to furthermore debit that particular asset, and we need to decrease cash because of this particular transaction. Cash is going out of business, so what is that we are going to write here? Credit cash. So this particular transaction, I hope it is understood, with the same amount remains the same. Purchased stationery from Delhi Furniture in cash. Now stationery is an expenditure, so accounts involved, which are the accounts which gets involved when stationery or expenditure, related expenditure takes place? So stationery account, and the second one is cash. So stationery, which is an expenditure, because this is not a stationery business, so it is an expenditure, and cash, which is going out, so it is an asset. Now how it affects? So there is expenditure on stationery increases, so we will debit increase in stationery expenditure, and cash is going out, so we will credit cash, so there, or decrease. So how it has impacted? Increase or decrease in assets. So expenditure, stationery, debited, we will write here stationery, and we will write here cash. I hope this is clear. Now I'll put up this one down here so that we can understand. Okay, I'll bring it down. Now let us see the next one. Fifth one, purchase goods for cash. So when goods are purchased for cash, what is happening? How it is impacting us? So accounts involved, which is purchases, we name it as purchases, and second one is cash. So purchase, nature of account, there is purchases of goods, which is an expenditure, and cash is going out, so we will write here asset. So purchases debit, how it affected? So purchase, there is an increase in expenditure in terms of purchases because it is a nominal account, so we will increase here, and there is decrease in asset because payment is made in cash, so there is a decrease. So how is that? Finally we are going to debit which account is to be debited and which is to be credited. So purchases here is to be debited and cash is to be credited. I hope this is clear. Now purchase goods from Mahesh. So again we have purchased some goods from Mahesh. So here what we are going to, which are the two accounts get affected? So one is purchase and second one is Mahesh, or we can say creditor. All right. So now nature of account, purchase is an expenditure and Mahesh is a liability. So how it affected? So there is an expenditure increase and liability also increases. In order to increase the expenditure, furthermore, what we have to do, we need to debit it. So we will write here purchases and we will credit because we need to increase liability as well at the same time because it is bought on credit, because name is given. When name alone is given, it means it is bought in credit. Otherwise, there would have been mention of cash. So we will mention here Mahesh. I hope this is clear. Now we'll take up the next one. Sold goods to Karim for 20,000. Amount in all the scenario is going to be the same. So sold goods to Karim. So there are two. Which are the two accounts which gets involved? So one is Karim, or let's say first goods, and second one is Karim. It is on credit. Okay, since only name is given, so it is going to be on credit. So goods are going out of the business, so it is what we denoted by the term called sale, and this is debtor because we are selling it on credit. So nature of account, how it is going to appear. So is it goods bought is an income. When goods are sold, it is an income. It is an income. We'll write here income, and there is second one which is debtor. So debtors are asset. So there is an I'll write it as an asset. All right. So there is income which is increasing because of sales. There is income increase. So we will write here increase, and assets which is debtor also increasing because we have sold goods on credit. So there is increase. Now, in order to increase the debtor and income, which is sales, so sales being an income, in order to increase it, what is that we need to do? We need to credit it. And the asset, debtor being an asset, in order to increase the asset in the form of debtor, we need to debit it. So we have to debit here debtor and credit here sales, right? So two accounts which we have identified here, sales and debtor. Sales being when we are selling, there is a revenue getting generated, so increase in income. So income is increasing or revenue is increasing, so it require, and anything where any transaction which results into increase in revenue, that particular account is required to be credited. So we have credited here sales, and there is an increase in asset by the name of debtor, so we have debited debtor. Let's go further and check this. What is the next? I'll bring it down here. Right now, next one, sold goods to Karim on credit. We have already seen. Now sold goods to Shyam on credit, so it is going to be the same, exactly the same nature transaction. Both are on credit, so therefore it is going to result into the same. So we'll write the same debtor, that is name is Shyam debit and sales credit. Only name differs here, Karim debit and sales credit. Now comes cash received from Shyam 5,000. So how is the entry going to be? What are the two accounts that gets involved? So one is cash and the second one is Shyam. So how we are going to enter this? Nature of transaction, cash is coming in, so increase, and debtor, he is making us the payment, so there is a decrease in asset, so decrease. Now how we will write, instead of this here, we will write it. So this is increase and decrease. Okay. And here it is cash is an asset, and the other account which is debtor, that gets affected. Okay, which is also an asset. So how is the entry going to be? Which is to be debited and which is to be credited? So Shyam, we have received cash, so cash is to be increased. So in order to increase the cash, what is that we need to do? We need to debit here cash, and decrease in asset in the form of debtor, that is Shyam, who was supposed to pay, has already paid. Therefore the debtor gets reduced to the extent he has made the payment. So how much? The name is Shyam, so we will write here Shyam. There is a credit done to Shyam, so he has made the payment of rupees 5,000. We'll write the amount both the side, 5,000. Now comes the next one, cash which is paid to Mahesh. So when cash is paid to Mahesh, so we have bought something from Mahesh on credit, so we will pay to him. So what are the two accounts that gets involved? One is cash and second is Mahesh. Now what is the account? Cash is an asset and Mahesh is a liability because we bought from him on credit earlier. Now making the payment. So liability, how it is going to be affected? So when cash is going out, so decrease in cash, and liability, because Mahesh, we have made the payment, so there is decrease in liability as well. So which are the two accounts here? So what is that we need to do to these two accounts? So we will decrease cash, so we will credit cash. And what is to be debited? Mahesh is to be debited because credit was already done when we bought him from him. Now, when we are making him payment, in order to reduce that credit or liability, we need to debit him because there is decrease in liability. So Mahesh is to be debit. I hope this is clear. So we will furthermore take it up. Okay. Now I'll take this next one. Deposited cash into bank. So we have deposited some money into bank. So which are the two accounts which gets involved? So we have done till here. We will do this. So the two accounts which are affected because of the deposits that we have made to bank, one is cash and second one is bank. Okay. So nature of account, cash is an asset, bank is also an asset. Bank, which is nothing but the firm's bank account. So he has deposited money into firm's bank. Now how it affected? So asset, cash which is going out, so there is decrease in cash. And how about asset, which is bank, increase in bank balance and decrease in cash balance. So increase in cash bank balance. All right. So how, what is to be done? Which is to be debited and which is to be credited? So bank is increasing. So bank balance, there is an increase. So we will debit because asset is required to be debited when there is an increase. So one account by the name of bank is decreasing. So we need increasing, so we will debit it to increase it further, and we will credit cash in order to reduce cash because cash which was there has been now deposited into bank. So there is, to that extent, cash is reduced, and to the same extent bank balance increases. Now withdrew cash for personal use. Now this is a different type of transaction. Personal use is nothing but drawing. So amount involved which are cash, and second one is, as per modern classification, we treat it as capital. So these two accounts are involved. So how is that we are going to write here? Nature of account, cash is asset and capital is capital, another category itself. So it is capital. How affected? Asset which is decreasing. So there is decrease in cash and there is decrease in capital. Now what is the entry that we are supposed to do? We need to capital, we need to reduce. If in order to decrease capital, we need to debit it because it shows credit balance, because it is firm's liability to the businessman. So what is that we are going to do here? So capital is to be debited and cash is to be credited. I hope this is clear. The name of withdrawal for personal use is termed as drawing, which ultimately results into reduction in capital. Now, the next one that we will take up here. So, received check from Shyam. Now, when we are receiving check from Shyam, what is the entry that we are supposed to do? Which are the two accounts which are involved? So, bank, because check is received. So, bank, and the second one is, or the there may be possibility, check in hand. Check in hand. And the second one, Shyam. All right. So, how is that entry is to be done? If the check is deposited in the bank on the same day, then we have to treat it as bank. If it is kept in the office and deposited the next day, then we have to treat it as check in hand. So here, received check, there is no mention whether it is deposited in the bank or not. Therefore, we'll treat it as it is kept in the office. So nature of the account, which are the two accounts which gets involved here. So we have check in hand and second one is Sham. This is when there is a check received, so it is asset and there is capital. Sham is creditor. Is not creditor, it is debtor because we received from him. So it is debtor or Sham. All right. Now the check, when we receive this, so what is the impact on bank or check in hand? Increase, and debtor decrease because he has already made the payment. So which are the two accounts? So check in hand debit and Shyam or debtor credit. I hope this is clear. Now the same check was deposited into bank the next day. All right. So there is the next day. What is the entry? We are going to, what are the two accounts which are affected? One is check in hand and second one is bank. All right. So how it is going to be entered here? What is the next thing we need to classify? Nature of account. So is it check in hand is an asset and bank is also an asset. Okay? So how it is affected? So there a check in hand is decreasing and bank is increasing. So debit, we need to decrease check in hand. So being an asset, we need to credit it. So check in hand is credited, and what is to be increased here? Bank. Now paid to Mahesh by check 5,000. Now this is an important thing. We have made so far we have seen made payment through in cash or through cash. Now we are making the payment by check. So paid to Mahesh by check. What is the entry that we are supposed? What are the two accounts that get affected? So one is bank and Mahesh is a creditor. All right. So these are the two accounts which are affected. So how is that we are going to record it? So bank being an asset and it is liability. All right. So Mahesh is a creditor, which is a liability. So asset which is increasing, paid to Mahesh. So asset is decreasing because we are making the payment by check. So there is decrease in asset and there is decrease in liability as well. So Mahesh account is debited and bank is credited because we are making him payment by check. So there is Mahesh as a liability gets decreased and bank as an asset because the payment is made in check gets decreased as well. Now we will see the next one. Paid salary to staff. So the two accounts which are affected are salary and cash. So how is that we are going to enter? Salary is expense and cash is an asset. So there is decrease in cash and there is salary expenses, which is when in order to increase the expenses, we need to debit it. So there is increase in expense salary. So what is the entry that we are supposed to do? So we will be debiting salary and decreasing cash. So crediting cash being an asset, it requires to be debit. Now the next one is paid rent by check. So again, the two items which are involved here, one is rent and second one is bank. Now rent being an expense and bank being an asset. Now expense increases and asset decreases because we are paying him. So rent is required to be debited and bank is required to be credited. I hope it is clear. Outstanding salary paid 15,000. So which are the two accounts? One is outstanding salary and second one is cash. So expense asset. Now there is an expense decreasing. Outstanding is decreasing. It is a liability. It is, instead of writing expense, we need to write liability. So liability is decreasing, so we'll decrease it, and asset is also decreasing. So this is outstanding salary is debit and cash is credit. I hope this is clear. Received interest from Ram. So which are the two accounts which gets involved? So one is cash and interest received. Now cash is an asset and it is an income, right? So there is increase in asset. We'll write here increase, and income also increases. So there is an increase. So how is that entry which is to be debited and which is to be credited? We need to increase cash. So cash is to be debited, and we need to increase income. We need to credit it. So that is interest. I hope this is clear. So looking at these 20 transactions, almost it touches every single aspect by and large. And if you practice them, you'll be able to understand with respect to the transaction resulting into two accounts getting affected, what is the effect that has happened because of a particular transaction, whether there is an increase in asset, increase in liability, decrease in asset, decrease in liability, or there is an expense that has come up. So considering that, if we have to increase the asset, we need to debit it. If we have to decrease the asset, we need to credit it, and logic goes for all the subsequent heads. So I hope this is clear. We have understood this. Almost it touches upon every single aspect. Now we will see the next one. Next question. From the following particulars, prepare the account of Hari, the proprietor of the business. Here we will see what is the implication or meaning when a particular account shows a credit balance or debit balance. Is this clear? So let us begin with this small account, which is capital. So balance the account and explain what is the closing balance indicates. So we will see that. So here capital introduced. So we will prepare one T-shape account here. Let us say this is T-shape account. I'll draw this, bifurcated it into two. So capital introduced. So how it is going to be entered in the T-shape account we have seen yesterday. So this is our debit side and this is our credit side. Debit side, there is a date column, then there is a particular amount, date, particular amount. So these are the entries. So cash capital introduced. So cash is coming in the business. There is increase in an asset. So we need to increase the asset by debiting the asset. So cash, this is name of the proprietor or capital account. Okay. So cash account is to be debited and capital account is to be credited. Liability, capital is in liability to the owner. Business owes this amount to the owner. So cash to capital, in capital we will write by cash. So we will increase capital because we need, this is our debit side, this is our credit side. So we need to increase capital. So we will credit the account. And by what account we need to credit? Since it is brought in cash, so we will credit cash. We will debit cash and credit capital. So cash is an asset. So in order to increase cash, we need to debit it. So how it is written here? Capital account is credited by cash. So there has been introduction of capital by the businessman to the business in the form of cash. So we will write here 30,000. All right. Drawing made 6,500. So what is the entry that we make? The drawing which reduces capital, right? So if a capital gets increased, it is required to be credited. Just reverse is the entry to be made when the capital is to be decreased. And drawing, by its name itself, it reduces the capital. So we will write here to drawing 6,500. So date, particular amount, I'll write here date, particular amount. So we will write here 6,500. All right. Now additional capital 22,000. Additional capital which is brought in by the businessman. So cash is coming in the business. So by cash, we will write here 22,000, and there is capital is required to be credited. So this is how it is finally entered in the book. Cash is, by cash means cash is debited and capital is credited, because we are writing cash in the credit side of the capital. Then there is profit earned. So profit eventually increases capital. Loss eventually decreases capital. So how it is to be entered here? Profit is to be credited, because credited to capital account. Ultimately, it is not a transaction. In fact, we have received this figure from our profit and loss account. So the balance ultimately gets added to the capital in case there is profit. In case there is loss, that finally gets deducted from the capital. So I hope this is understood. So what is ultimately to be done is to impact the increase in capital, and that can happen by crediting the capital account and debiting the profit and loss. So by P&L, profit and loss, which is 7,500. I hope this is clear. So we will now balance it. So how it is to be balanced? Let's see. We'll draw two lines here and this one. So this is apparently appears to be higher. So we'll total it separately. So 3,22,000 and plus 7,500. 3,22,000, 3,29,500, 3,29,500, and 3,23,000, 3,23,000, 23 plus 6, 9. So 3,23,000 is the balance to balance carried down. Now this is our balancing figure, which we have achieved by deducting the total of credit side minus the debit side total. So this is our balance. So this much of balance that the capital has now, though we started with 3 lakh, then there was an additional capital of 22,000, and then there was a profit of 6,500, 7,500, and then there was also a drawing of 6,500. All these items are added and drawing is deducted, then we get the closing capital. So we'll write here to balance brought down, which is how much? 3,23,000. Now what does this mean? What does this indicate? So this indicates that the business has a liability, inside liability or liability to the owner, that 3,23,000 rupees which the business has, it is to be given to the owner, or business owes it to the owner. So this is its implication. Having done all these transactions, finally we have come up to this understanding that 3,23,000 is the amount which is still to be paid by the business to the business. So I hope these two examples have made you a little more clearer in terms of applying the knowledge that we have gained in our previous chapter, which is rules of debit and credit. Now I can work out independently the questions which are given there. Refer to your books and work out these questions, and refer to this particular explanation whenever there is understanding gap. So I truly thank you for being in here and listening to the whole content that I tried to bring before you, touching upon the important aspect of preceding aspect of journal entry, which is rules of debit and credit. So my appeal to all the students and the viewers is in case you have liked this whole discussion, subscribe it so that the new chapters which I'm going to come up, you will be able to get the notification. Furthermore, share it to the neighborhood students or in your school so that other students also happen to take the advantage of this. And do mention your feedback in the comment section, because that is something which I always look forward for, and see that if some improvisation with respect to your understanding the content in an effective way, which I can pick up from the comment, will certainly try to incorporate to the extent it is incorporated. So thank you once again. In the next class, we will take up origin of transaction, source documents, and preparation of vouchers, how we are going to prepare them. You can also connect with me on my mail ID, which is written here, so that if there is something which you would like to share, you can share on my mail ID. So thank you and wish you all the very best for your upcoming exam. Prepare well, refer to the content which I have shared, and view it till the end, because everything which I am doing is sequentially, so that start till end in a particular chapter, you have every concept and to certain extent application based understanding as well. Thank you so much.